Hey travelers of time and curious minds, welcome back to WanderlustRon, where history meets the present and the past echoes into our future. Today, I'm diving headfirst into one of the most dramatic economic collapses in modern history, the Great Depression of 1929. What caused it? What happened after? And more importantly, could it happen again? The Roaring Twenties weren't just about jazz, flappers, and fast cars. The US economy was booming. Factories were buzzing, stock prices soared, and credit was easy. But underneath that glittering surface was a ticking time bomb. Let's break down the 5 major causes of the Great Depression. First, the stock market bubble and crash. All through the 1920s, stock prices shot way past companies' real values. People weren't just investing, they were straight up gambling. Tons of folks bought stocks with borrowed money, what's called buying on margin. When that bubble burst in October 1929, panic set in. Billions went up in smoke within days. Second, bank failures and a total lack of regulation. Thousands of banks tanked because they'd sunk customer deposits into risky bets. There was no FDIC back then. When your bank failed, you lost everything. Without rules or oversight, the whole system spun out of control. Third, overproduction meets underconsumption. Factories and farms flooded the market with goods, but wages weren't keeping up, and people were drowning in debt. Eventually, demand just dried up, and so did production. Fourth, the global domino effect. The US tried to protect its industries with the Smoot-Hawley Tariff Act, but it backfired hard. Global trade collapsed, other countries retaliated, and the depression went worldwide. Fifth, wealth inequality. In 1929, the top 1% controlled nearly 40% of US wealth. Sound familiar? The bottom half barely had anything to fall back on. When things broke, the poor felt it the most. Now let's fast forward nearly a century. Today, we've got high inflation, soaring corporate profits, record-breaking stock markets, plus rising inequality, massive personal debt, and worries about bubbles in tech, real estate, and crypto. Banks might be more regulated now, sure, but cracks still show up, like in 2008, or with recent regional bank scares. And global trade tensions, especially with China, sound a lot like the protectionism of the 1930s. Not to mention, the top 10% now own nearly 75% of US wealth. Let's recap those similarities. Speculation in overvalued markets, high personal and corporate debt, rising wealth inequality, a fragile global trade environment, and over-reliance on credit-driven growth. Look, I'm not saying a Great Depression 2.0 is guaranteed, but history doesn't repeat, it rhymes. Understanding the past helps us prepare for what era's next. Thanks for taking this journey back in time with WanderlustRon. If you enjoyed this economic deep dive, make sure to like, subscribe, and share it with your fellow history buffs. What do you think? Are we on the verge of another economic crash? Or have we learned from our past mistakes? Let me know in the comments below. And as always below, see you in the next one.